The problem with investments is property prices are too high, FD interest rates are too low, and you don't want to buy jewelry. But what if I tell you that there is a solution? Yes, I'm talking about mutual funds. The same ones that are subject to market risk, so you need to read the scheme related documents carefully before investing. But what is this risk? How are people still making money with mutual funds? I know you had all these questions and more when you clicked on this video. So ladies and gentlemen, it's okay if you don't know anything about mutual funds, because in today's video, we are going to see what are mutual funds and what are the different types. 4 rapid fire facts that you must know before getting started. A step-by-step tutorial where I will show you how to buy a mutual fund using Zerodha's Coin app. And towards the end, I'll give you a bonus tip that'll help you convert your time into actual money. Just so that we are clear, no mutual fund is sponsoring this video. So I don't care which mutual fund you choose. I'll just give you the right information as if I'm talking to my younger siblings about investments. And I hope it helps you learn something too. But before that, if you want me to make more finance videos, then make sure you smash that like button and subscribe to our channel. Let's begin. If you already know what mutual funds are, then you can directly skip to this minute to see how to buy a mutual fund using Coin. But if you're a new investor, welcome to the club. Let's quickly first understand what are mutual funds. A mutual fund collects money from people like us, say 500 rupees from me, 500 rupees from you, and makes a money pool. Then a fund manager uses this pool to invest in stocks, bonds, and other assets so that your money can grow. You don't have to worry about where it is being invested because the fund manager takes care of all of that. And in return, they charge you a commission anywhere between 1% to 3%. And the returns or profits of those investments are then redistributed among people, depending on who invested how much and for how long. If you want to invest long term, then mutual funds can be great because instead of sitting idle, your money will go out and make more money for you. But how do we know that a mutual fund company will not run away with our money? Because mutual funds are regulated by SEBI, the Securities and Exchange Board of India. So running away is highly unlikely. But yes, all of us tend to trust some mutual funds more than others. I'll show you how to look out for such funds in the next section. First, let's have a look at the 3 major types of mutual funds that are available. Number 1, equity funds. These mutual funds invest in stocks, shares of companies. They are considered moderate to high risk, but they can also give high returns. Number 2, debt funds. These mutual funds invest in debt instruments like government securities, bonds, debentures. These are for people who want low risk but steady returns. And number 3, hybrid funds. As the name suggests, they are a hybrid. They invest in both equity and debt. Maybe 50-50, 70-30. Their aim is to give you moderate returns at moderate risk. Then there are other types like sector funds, liquid funds, tax saving funds, yada yada yada, which you will understand on need per basis. But for now, let's stick to the basics and remember that these are how they are majorly classified. Now, before I show you how to buy a mutual fund, here are some rapid fire facts. Number 1, equity mutual funds can be further classified into large cap, mid cap and small cap. Large cap schemes invest in big, well-established companies. So naturally, the risk is less. Mid cap is moderate risk and moderate returns. And small cap mutual funds invest in smaller companies. So the risk is high, but the returns can also be high. If you're new to investments, then large cap mutual funds can be a good place to start. Number 2, if you want to invest short term, say for 1 or 2 years, then instead of equity mutual funds, look for debt funds. They have lower risk than equity mutual funds, plus they can give more returns than a bank. There's a third category of mutual funds called index funds. They are passively managed funds, which means they don't have a fund manager in between. And hence the expense ratio, which is the commission you have to pay for index funds, is very less, say 0.1% or lesser. Even Warren Buffett recommends index funds as a safe haven for long-term savings. I'll show you how to invest in an index fund in the next segment. And finally, there are two ways to invest in mutual funds: lump sum and SIP. Lump sum is when you invest a huge amount, say 1 lakh rupees, all at the same time. And SIP is systematic investment plan, where you choose say 500, 1000 or 2000 rupees, and that amount every month from your savings account will move to your mutual fund account. If you're new, then instead of putting all of your money lump sum, starting a monthly SIP is a safer option. But wait, who decides how much money should be invested every month? You get to decide it, depending on your goals and using this SIP calculator. For example, suppose my goal is in the next 20 years I want 1 crore rupees and I'm expecting a rate of return of say 12%. Now mutual funds are expected to give better returns than 12, but I'm being a little bit conservative here. So I'm expecting a 12% rate of return. As you can see, for that I need to start a SIP of 10,000 rupees per month. Similarly, depending on your long-term goals, you can use this SIP calculator to help you decide how much you need to invest every month. I've left the link of this calculator in the description. So make sure you keep these 4 rapid fire facts in mind before you start your mutual fund research. Now let me show you a step-by-step procedure of buying a mutual fund. If you want to start investing in mutual funds through Coin, then the first step is to open a Demat account with Zerodha. Let me tell you this, you don't need a Demat account if you are investing in just mutual funds. But I use Zerodha for stocks, and even though I've used other apps in the past for mutual funds, now I want all my stocks and mutual funds in one account. But you don't have to hurry. Wait till the end of this tutorial, where I'll show you its pros and cons. And if you think this is the right platform for you, then you can use the link in the description to open your Zerodha account, which is India's #1 discount broker in terms of active clients. So the first step is to scroll down to the description of this video, click on this link, enter your phone number, and the Zerodha team will help you with the Demat account opening process. It's all online and takes about 15 minutes. Anyway, after you've opened your account, go to your Play Store and search for Coin by Zerodha and install it. And log in using your kite details that Zerodha provides you after account opening. Once you log in, go to the Discover tab. Here you can search for mutual funds based on the types we discussed earlier: equity, debt, hybrid, index funds. In equity also you can select say large cap and see the various options available. As you can see, there are so many mutual funds listed even after selecting these 2 filters. Now know this, there is no one supreme leader mutual fund that is best for everybody. The advantage of all of this variety is that you get to pick which mutual fund is best for you. Here are some parameters that can help you decide. Number 1, AUM, asset under management, which is the total market value of investments that a fund manager is managing on behalf of his or her clients. For some investors, larger AUM serve as a function of trust. And to make your job easier, the Coin app currently displays mutual funds in decreasing order of their AUM. Next, you must check if the fund is growth or dividend interim payout. In dividend payout, dividend, which is any profits the company shares with you, is transferred to your bank account. But growth means you're telling the fund company to invest back these dividend payments. I prefer growth, especially for long-term investments, because I don't need any money now. I'd rather reinvest and get more money later, thanks to the power of compounding. The third parameter to check is if it is a direct plan or a regular plan. Some apps sell mostly regular plans where the expense ratio, that is the commission you have to pay, are higher. But on the Coin app, I have mostly found direct plans in which you're buying the fund directly from the asset management company. So you don't have to pay additional expense ratio to any intermediary, advisor or broker. So before buying, double check that it is a direct plan. Awake? If you have not slept yet, then make sure you like this video. And bear with me for a few more seconds and then I'll show you how to buy a mutual fund. Some other parameters you need to check that will help you decide whether a mutual fund is good for you or not are CAGR, which is the compound annual growth rate. Exit load, fees you need to pay in case you exit the scheme before a certain time period. Expense ratio, how much the fund manager will charge you for maintaining your account. As we discussed earlier, it can be between 1 to 3%. Next, check out who the fund manager is and feel free to read more about this fund manager's history. And of course, fund holdings will help you see what companies or sectors this mutual fund is invested in. On the Coin app, you'll also find some videos like these, which tell you more about that fund house. And at the bottom, you'll find the disclaimer and those infamous scheme related documents. Make sure you check these out. Now let's do some buying. Let's assume I want to start a SIP for 1000 rupees and I want to invest in an index fund. I'll go back to Discover, select index funds, and let's say I want to go for ICICI Prudential Nifty Index Fund Growth. I am in no way recommending you to buy this fund. Just for this demo, I am. I like that the expense ratio of this fund is 0.1%, which means I'm paying very less commission on this fund. Now, before we go ahead, your homework is to explore the Coin app and tell me what other mutual funds have expense ratio lesser than 0.1%. I'll be waiting to read your comments. Going back to buying. Just a less expense ratio is not the only factor to buy a mutual fund. So I'll check the other parameters as well. After that, if you want to invest just one time in lump sum, then select buy. But I want to start a SIP of 1000 rupees. So I'll select SIP. It says that the minimum amount is 100 rupees. But first you need to add some funds. I already have some amount here, but I'll add some more funds just to show you. You can use GPay, UPI or net banking. You can even withdraw money from your account here. After the transfer, it may take some time for the amount to reflect here. Since I want to start a SIP of 1000, I am going to enter 1000 rupees here. Frequency, monthly, first of every month, and yes, start SIP today until I cancel it. Now this feature, automatic step up, as of today, you'll only find on the Coin app. But what does it do? Let's assume that you're starting a SIP of 1000 rupees today, but every year you want to increment this amount by a certain percentage because your salary will increase, so your investment should also increase. You can enter that percentage here, say 5% or 10%. I'll enter 10. As you can see, it says your SIP amount will increase by 100 rupees on, you need to select the month, say 1st of March every year. And every year on 1st of March, your SIP will increase by that much percentage. If you want more clarification about this feature, then you can click learn more here to know more about it. And if you don't want the automatic step up option, then just uncheck it. But in my opinion, it's a good option to have for long-term savings because you don't have to worry about modifying your SIP every year. So everything is set. All I need to do is hit the create SIP button. But before you do, remember, mutual funds are subject to market risk, so read the scheme related documents carefully before investing. I click on create and my SIP is created. Now if you place your order within the cutoff time on market days, which is 12 PM for liquid and 1:30 PM for other schemes, then it takes around T+1 days for the units to reflect in your portfolio. Meanwhile, I'll go back, go to investments, go to the orders tab, and I can see that my order is in pending right now. But once the units are allocated to me, I can see them here under the portfolio tab of investments. Suppose after a few weeks or months or years, I decide that I want to modify my SIP. Then I just need to go to the SIP tab, select the SIP, and I can either modify, delete or pause it, depending on what I want to do. And that's it. That's how you buy your first mutual fund. Now, before I give you the bonus tip, let me tell you that the only reason why I showed you all of this on the Zerodha's Coin app is because I use these platforms. And if you also want to buy mutual funds from the Coin app like me, then you can use the link in the description to open your Zerodha account. And at the start of this video, I have shown you the step-by-step process of how to open your account online in just 15 minutes. You can access this video by clicking right here. But wait, don't go now. Go after the bonus tip. Online, every investment guru is telling you, power of compounding. The sooner you invest your money, the more returns you will get, the more money you will make exponentially. So invest now. The eighth wonder of the world, compounding. Relax. It doesn't mean that you will put all your hard-earned money in any random mutual fund. The purpose of this video is to not make you buy your first mutual fund today. Before you invest your money, you need to learn the basics of finance. You need to open your account, explore the mutual funds present on the homepage, compare their parameters, invest little amounts, say 100 or 200 rupees, and observe the market first. So today's bonus tip is this. Before investing your money, invest your time to learn first. Please don't be like those people who waste their precious time on Instagram Reels or Twitter Wars, and when it comes to investing their hard-earned money, they want some random advisory platforms to give them tips, or they wait for some top-rated mutual funds video. That is a short way to lose money. But you have watched this video so far, so you know how to use your time wisely. I hope that the information we have shared today helps you in figuring out which mutual fund is best for you. Because remember, your money is your responsibility. Nobody else cares. But there is one investment that has 0% risk and can give you 100% returns. And that is subscribing to our YouTube channel and hitting that bell icon. Because we make quality career and finance videos that are crisp and to the point. And don't forget to share this video with your friends and family. And only if you think that Zerodha and Coin are the right platforms for you, and you think that in future you're going to buy shares of companies directly, then you can use the link in the description to open your Zerodha Demat account. This is the video that will show you how. I'm Taskeen, this is The Urban Fight, and I'll see you in the next video.